And we are live. Good evening, everyone. Tonight, I want to talk to you about what's happening in the crypto markets, specifically, talk to you about what's going on with Celsius Network. Now, yesterday, today, depending on where you live at, we woke up to news that Celsius would be freezing withdrawals from their platform. Basically, you cannot get your crypto off their platform if you've been staking or doing any type of business with that actual particular protocol. Now, if you have been following me for the past 2, 3, 4 years, I have consistently stated to you, not your keys, not your crypto. Not your keys, not your crypto. Not your keys, not your crypto. What does that mean? Crypto was created to remove middlemen from out of the equation. And everywhere you look, you have so many people because they are lazy, because they are greedy, or just for lack of knowledge, they don't understand what that means. When you have your crypto sitting on an exchange like Coinbase, or sitting with BlockFi, or sitting with Gemini, or sitting on a platform like Celsius, you do not control the private keys, meaning that you cannot take true custody of your asset. And what we're watching happen right now is that many of these exchanges and business models that are pretending to be crypto are getting tested. And I watched this happen with Mt. Gox. I watched this happen with Quadriga. I watched this happen with Bitfinex and so many other exchanges and platforms similar to Celsius. When are you going to wake up and understand that you need a device like this? This is known as a Ledger Nano X. This is a hardware wallet. When you hear someone talk about your private keys, it is similar to your email address and account. You have a public address or a public key similar to your email address. You give that to someone when you want them to send you cryptocurrency. And then you have a password for your email account that obviously you would not share with anyone, because if you did, they can gain access to your email account. Well, your private key is similar to that. Remember, your crypto isn't sitting on this device. Instead, your crypto, right, is within your wallet and your actual ledger balance, right? You just simply have a balance on a ledger somewhere, and your wallet allows you to access those transaction inputs and outputs. Now, this is very, very important here. Your private key allows you to, number one, gain access to that wallet, and number two, sign transactions. Now, if this device is damaged or lost, guess what you can do? If you remember your seed phrase, you can back up your wallet anywhere in the world. That is the power of crypto. It is not for you to run around here and use platforms like Celsius and Coinbase for convenience. That's not the purpose of crypto. That's not what we're here to do. And when you see a platform paying out 17, 18, 19, 20%, the first question you need to ask yourself is, where is the yield coming from? How are they able to pay out these rates? In most cases, similar to Luna, these are Ponzi schemes. They are either paying you with inflation, meaning they're minting new coins, or they need new money coming in to maintain what they're doing. Now, this is very important because I want you guys to pay attention to all of the naysayers right now. All of the people who are saying to you, I told you crypto was a scam. I told you it was a bubble. I told you it wasn't decentralized. Screenshot these individuals, because see, there's a huge difference between legitimate projects and legitimate cryptocurrencies like a Bitcoin, like Ethereum, and things like Dogecoin, SafeMoon, garbage like Ripple, Stellar Lumens, and stuff like Celsius and Nexo and BlockFi. They're not the same. And see, what happens is that because people are not sophisticated or savvy and they don't take the time to educate themselves, they simply see something like this and they lump it all together to prove their point somehow that crypto is some type of a scam or a scheme. That's like saying Pornhub is the internet. No, Pornhub is a website that sits on top of the Internet Protocol suite, right? It's not reflective of the entire web and the internet. But see, what happens is that people pick and choose and they take these little things. So now, because the market is going down, everyone's coming out the woodwork now and everyone's talking about this and they're talking about that and how this coin isn't decentralized. And see, I told you, I read a news article because see, many of these platforms, what they do is they simply read the news to you, right? And somehow they make it as if because they read a news article, they predicted something. No, see, I was here talking to you about crypto 3-4 years ago. I was on this platform talking to you before all of the celebrities and entertainers came into this space. And I'm not saying that to make it seem like I'm some type of authority that you have to listen to. What I'm saying to you is that an individual needs to prove to you that they actually understand the technology, the difference between centralization and decentralization, and what we are here for. See, when you look at XRP, when you look at Luna, when you look at Celsius, these are attacks on Bitcoin. Because what's going to happen here is because there are so many uneducated people on the purpose of crypto to be censorship resistant, to be borderless, to be permissionless. When you have garbage like XRP, Luna, and Celsius, that's billions of dollars that's not going into Bitcoin. That's not going into Ethereum. And then what happens is that because you don't know the difference, you go take out a second mortgage on your home, you max out your credit card, and you put it in something like Anchor or Terra, or you put it in something like Luna and or Celsius, and then you wake up one day and now you can't get your money out. And what you're going to do now is you're going to run to government and beg for regulations. So this is an attack on our industry. And I've been on this platform telling you for years, stay away from stuff like this. See, everything looks great when the bull market is going on and your meme coin and your dog coin is doing well. And then you wake up and everything's down 90%. Now, I know what some of you are going to say. Well, Bitcoin's down as well. What's happening now? This is known as a stress test. The system is being tested. But see, you have to understand that these are anti-fragile systems, meaning that the more Bitcoin is stressed and tested, the better it becomes. And this is why I encourage you to read this book, Anti-Fragile by Nassim Taleb. If you're a student of My Tech Academy, you already know about this book, meaning that the more stress and pressure you put on the system, because it's a dynamic and robust system, it can heal itself. It can navigate these waters itself. Whether Bitcoin is $1,000 or $2 million, the protocol is going to perform the way it's intended on performing. That's the key to what's going on here. Your wallets will still work. Your transactions will still be able to be sent. That's the key. No one can shut off your Bitcoin wallet if you truly have custody of your assets. That's what's decentralized. That's the key. That's the difference. And I think that so many of you, you miss what are we even here for? And I get it because of the way the economy is structured, with this whole fractional reserve debt-based economy. Many of you are in positions where you have to gamble and you have to change because we created this Hunger Games like economy where it's, everybody has to eat someone in order to survive. But you have to understand, you have to know what you own and why you own it. And you have to understand how to structure a portfolio because this is our Lehman Brothers and Bear Stearns moment where the market is going to be tested. And now, as I said to you guys before, when you have people like Michael Saylor, who is trying to use traditional finance, leverage, and debt to go out and acquire Bitcoin, well, the marketplace now knows that he's over leveraged and under collateralized. What do I mean by that? They know that he's purchased Bitcoin above $30,000, so they know that he's underwater, and they know below 21,000 he has to put up more collateral for margin. So what do you think the market's going to do when they know that? See, hedge funds operate from the standpoint, Goldman Sachs and the big boys, they can print money at will. So they can create these exotic derivatives to attack Bitcoin in regards of price, not the protocol. This is important. They can attack Bitcoin's price, not from the standpoint of trying to destroy Bitcoin, but by trying to bankrupt Michael Saylor. And see, this is what many of you don't understand, that there is something known as 4D chess. There are games being played within the game. So what's happening right now with Celsius? The marketplace understands that Celsius doesn't have enough liquidity on hand to meet the demands of their customers who want to take their crypto off of the platform. So what are they going to do? They're going to put more and more pressure on Celsius because, see, Celsius is effectively acting and behaving like a hedge fund. It's not a bank, because what they're trying to do is take customers' assets and move them around in different DeFi protocols and try to earn yield, or try to lend out crypto at 12%, right? And then when they get to 12%, then allow you to stake with them, because they're basically taking your assets and lending it out at 12%, and they can pay you 7%, 9% and keep the spread. Because if they're paying out 9, right, and they're collecting 12, or if they're paying out 7 and they're collecting 12, well, that's a 5% spread. You can run a business like that until you have a whole bunch of assets outstanding out there, and you have more people wanting to withdraw, and you don't have that collateral on hand. And that's what's happening right now. They're being tested, because basically what we're seeing is that the emperor has no clothes. Because, see, what they were trying to do is use the Celsius token as a way to basically have that liquidity base. Because think about it. If I'm a business and my business is lending out money, I don't want to hold reserves. I want to lend out as much crypto as possible, right? So if I'm lending out to institutions and individuals at 12%, I want to, if I have $100, I want to lend out all 100, because I want to make that 12%. But what happens to the people who's actually giving me the assets and staking with me? What if 10% or 20% of them want to unstake? Well, I don't have any cash on hand to pay them. So effectively what they did was create the Celsius token. So what they was doing is incentivizing you to hold the Celsius token, and they would give you a higher yield on your actual assets that you're staking with them. The problem is that, number one, you have whales inside of Celsius that are dumping the token at a high rate, at a high clip. And then on top of that, the value of the token's going down. So then you run into problems. Also, because they're not a bank and they're not really doing real economic activity with you, with your assets, now also what they started doing is taking it and putting it into Ethereum too. Well, when you start putting assets in the Lido, in ETH2, on the Beacon chain, remember, you can't unstake those assets. So what happens now is they have a large amount of Ethereum locked up on the chain, and people want those assets. Well, guess what? They don't have them, right? So there's counterparty risk there. There's a problem. And I've been talking about this stuff over and over and over again. So, and the difference with crypto is that we don't have a Jerome Powell, a Federal Reserve, right? Or a Treasury that's going to actually come and bail out one of these protocols. So a lot of this volatility is really just institutions really seeing that Celsius is bleeding, Luna's bleeding, and they're going to step on the gas and push down. You have to be savvy enough to see these things and know these things and know what you own and why you own it, and understand the difference between centralization and decentralization. These things are key, very, very key. Now, with that being said, I see some of you guys in the chat talking about the video quality. The video quality is bad. You may need to refresh your page, because on my end, I'm looking at my stream and everything is fine. So I think maybe you just may need to refresh or click the actual cogwheel and set it to a higher frame rate. So with that being said, though, guys, please like this video, share this video, subscribe. Make sure that you hit the notification bell and you set the bell to all, meaning you receive all of my notifications. Also, YouTube does not send out my notifications when I go live. So below is a telephone number that you can text. Text the word YouTube to that number, and you will be on my text message list. Also, I know I've been saying this for a while, but it's been a little bit busy. I'm doing a giveaway. I'm giving away $5,000 worth of crypto. The only way you're going to know about that giveaway is by being on my text message list. Also, I am the founder and creator of My Tech Academy, where we cover all things crypto: how to buy, how to sell, how to store your crypto, how to put together a great portfolio, We cover things from NFTs, creating NFTs, staking, lending, DeFi, and so much more. More importantly, I'm going to be here throughout this entire crash, correction, bear market, whatever you want to call it. As I was here after 2018, as I was here after 2015, I will continue to be here. I am not one of these individuals that jumped on crypto's bandwagon because it was popular to do so. I did not come here for a cash grab. I truly believe in this technology. More importantly, I believe that when you are, as we're going through this great reset in the fourth industrial revolution, it is going to be extremely important that you are in groups similar to My Tech Academy so that you are aware of the pros and cons of what you own and what's truly going on. That's the entire purpose of My Tech Academy and what we have going on. We're really trying to build a community of individuals that really are passionate about the technology, passionate about freedom, and where we're trying to go and what we're trying to build. So throughout this bear market, I'm reopening up the coding bootcamp again. We're going to start that up next week. I am extremely excited about doing that because I believe that in these bear markets, this is how the wealth is going to be made for people who focus on building things, who understand centralization versus decentralization, and are really focusing on gaining the skills to really truly build what people call the Web 3. So again, we have a free 3-day trial. Please come test it out. See if you like it. If you're not interested after 3 days, as long as you cancel, you will not be charged. With that being said, oh, one more last thing. Tony, the closer, is having an event that will a conference in Miami from August 4th to the 7th. The beautiful thing about this conference is it's going to be free. This is not going to be one of those conferences where we're trying to have a bunch of celebrities and rappers so that you could take a bunch of photos and charge you $3,000, $4,000, $5,000. That's not the goal here. The goal is to get you in the room, to get you the skills that you need so that you can become an entrepreneur, scale your business, and have the skills and resources that you truly need. We're going to be covering everything from how to build a brand online, how to monetize that brand, how to fix your credit, how to apply for credit cards and get proper funding. We're going to be covering everything from, tokenomics, inflation in cryptocurrencies, how to value a cryptocurrency, diving into real estate, creating NFTs, and so much more. I cannot stress this to you. The conference, the first 5,000 tickets are going to be free. If you want more information about this, you need to go to Tony the Closer's Instagram page on his platform, and you'll be able to see that. With that being said, guys, if you can hear me and you can see me nice and clearly, type 1, and we can get started. Great. There we go. So it says crypto debacle at Celsius rattles market already shaken by Terra. And that's, Terra Luna. A month after the implosion of the Terra stablecoin sent the crypto market reeling, another crisis is causing fresh angst across the entire digital asset universe. Celsius Network, one of the biggest lenders in crypto and a key player in the world of decentralized finance, said late Sunday that it was pausing withdrawals, swaps, and transfers following weeks of speculation over its ability to make good on the outsized returns it offered on certain of its products, including yields as high as 17%. The move effectively halted a platform with registered entities across the globe and billions of dollars worth of digital coins under management, accelerating a sell-off in the broader market that was already in progress on concern over prospects for tightening monetary policy ahead of a Federal Reserve meeting this week. The Celsius news added fuel to the fire, adding to the uncertainty in the market, said Vijay Iyer, Vice President of Corporate Development and International at crypto platform Luno. There is a lot of pressure on prices as we go into the week of Fed decision, coupled with concerns on the protocols offering high yield products. Now, this is very key. I am a crypto OG. I've been doing this since 2012. I remember when Roger Ver came on here and played this video. Look at this date. Look at the date of this video. And I'm playing this because what do I always say to you? Where there is smoke in crypto, there is an absolute fire. Why do I say this? Because everything is open on the blockchain, meaning that you can search and see where the crypto is sitting at, where the bodies are buried. So whenever you start seeing and hearing rumblings that a particular protocol doesn't have enough reserves, or a stable coin isn't fully backed, or an exchange doesn't actually have the crypto assets, 100 out of 10 times, most likely it's true. The only question is, how long can they paper over that? Or can market volatility in their trading get them out of that situation? Again, crypto was not created for you to use centralized exchanges. Crypto was not created for you to leave your crypto sitting on these platforms. Now, I want you to listen what he said about Mt. Gox. Everyone knows about the infamous Mt. Gox, how they was hacked multiple times and ended up filing bankruptcy and taking everyone's crypto. I lost a sizable amount of Bitcoin because at the time, I really didn't know what I was really doing back then. But I took these L's, and this is why I'm so passionate now when I talk to you, because I lost millions of dollars worth of Bitcoin on Mt. Gox. Now, I want you to listen to what he's going to say, and it's going to remind you similar to what Alex is saying right now about Celsius.
I'm Roger Ver, longtime Bitcoin advocate and investor. Today I'm at the Mt. Gox World Headquarters in Tokyo, Japan. I'm Roger Ver, longtime Bitcoin advocate and investor. Today I'm at the Mt. Gox World Headquarters in Tokyo, Japan. I had a nice chat with Mt. Gox CEO Mark Karpeles about their current situation. He showed me multiple bank statements as well as letters from banks and lawyers. I'm sure that all the current withdrawal problems at Mt. Gox are being caused by the traditional banking system, not because of a lack of liquidity at Mt. Gox. The traditional banking partners that Mt. Gox needs to work with are not able to keep up with the demands of the growing Bitcoin economy. The dozens of people that make up the Mt. Gox team are hard at work establishing additional banking partners that eventually will make dealing with Mt. Gox easier for all their customers around the world. For now, I hope everyone will continue working on Bitcoin projects that will help make the world a better place.
Now, while he's sitting there saying that and telling you everything's fine, don't worry, this was in 2013. Mt. Gox was insolvent. They didn't have the liquidity on hand to meet customers' demand. And they ended up going bankrupt and taking everyone's money. And here we are now. We're sitting here, and Celsius tweets this out. They tweeted this out yesterday. It says, Celsius Network is pausing all withdrawals, swap, and transfers between accounts. Acting in the interest of our community is our top priority. Our operations continue, and we will continue to share information with the community more here. Now remember, when Luna was imploding and collapsing, what did Do Kwon do? He tweeted, don't worry, everything is going to be okay. Everything's going to be fine. Don't worry about it. Well, we know for a fact everything wasn't fine. And then today we hear about news about Binance now halting withdrawals. How long have I been telling you that Binance is a criminal organization? If you think what I'm saying, I don't know what I'm talking about. Look at this. A year ago, is the Tether flood behind us? I have videos on here talking about Tether and telling you Tether's the next ticking time bomb. It's only a matter of time before Tether implodes, because these things are not crypto, right? If your cryptocurrency has a CEO, has an executive or a company behind it, then it's not a cryptocurrency. It's pretending to be a cryptocurrency, offering you unregistered securities like Ripple. Why do you think Ripple is being sued right now? I know what you're gonna say, oh, whoa. XRP Ledger is different than the actual Ripple Labs company. Yeah, but who's building around the technology? Can you actually spin up a node? Do you really know what's going on? Who's the people? Who is driving the value of XRP? Is it the adoption from the banks and the users and the customers? Or is it all based around Ripple Labs and the development that they're doing? And I see this happening over and over and over again. And these things are so simple. But because many of you are emotionally invested, you lack the ability to just see what's right before your very eyes. Right? These things are extremely important that you understand these things. Very, very important. Now, again, you could go here and I have videos going back almost 2 years ago talking about Tether. I'm trying to find where the video is at here. I had another video talking about Tether a while ago. I think it was like 2 years ago. Can't see it here, but I don't want to waste too much time on that. Now, this individual right here did a great job explaining the Celsius blow up. But here's what's interesting. While they cannot allow you, they can't meet customers' demands to withdraw, they're still allowing you to deposit. Now they're saying you can earn up to 18.6% and you can get paid weekly. Now they claim that they're not a bank, right? Because they're not. And look at the rates that they're giving you. If you hold the Celsius token, they'll give you 9.3%. If you don't hold the Celsius token, they only give you 7%. And you can see they have, these are different stable coins. They have USDC, USDT, the Binance dollar, right? Now, if you come up here and you go to individuals and you go to borrow, this is the whole business model. And this is what I was talking to you about earlier. Effectively, what you can do is you can stake your crypto with them. When you're staking crypto means that you're supposed to be in a decentralized world, staking your coins where you still have access to them and you control the keys, right? You're staking them in a protocol. But in this particular case, you're giving your crypto to Celsius. You don't control the keys at all. So now what they're going to do is you're going to park your USDC, USDT, or UST before collapse with them. And then they're going to take that and they're going to lend it out at 12%. So as you can see, you're getting 7% for giving them your coins. They're lending it out at 12. The spread is 5%. If you hold their token, the spread is 3%. Now, that works in the ideal world. But as I said earlier, remember, if the business model is to lend out assets, then holding your dollars are liabilities to them because they have to pay you 7%. They have to pay the 9% that they quote unquote are marketing. So obviously you're going to lend out every single dollar that you have. Why? Because you need to get that 12% and make that spread. But as I was saying earlier, what happens when you lend out all of your collateral, all of your assets, and now people want to redeem and unstake those coins? Well, now you have a problem. So the business model doesn't make any sense. So what they decide to do is they create a token, the CEL token. And what they say is, if you buy the CEL token and you hold the CEL token, what you can then do is rather than getting 7%, get 9%. So now it creates a liquidity buffer for them in the event that if people want to be able to take out, their assets, because people are holding on to the token. Why? Because you're getting more yield by holding the actual CEL token. It's an incentive. Remember, the whole purpose of a token is to incentivize some type of behavior within the network. Now, when the market is going up, everything is great. The CEL token's going up. And let's look at the Celsius token right now. I'll pull up a chart for you guys so we can just, before we get into what's actually happening. And if we come here and we go look at this, I think this is important. I want to look at this real quick. This is insane. It got as high as what? Almost $8? It got as high as almost $8, and now it's down below $1. Today, I believe it's at, right, is this Celsius Network? I want to make sure. I want to make sure we're looking at the right project. Celsius. Popping up. I believe that this is Celsius, though. Want to make sure we can just simply click on the website. Yep, Celsius Network. Yeah. So it's at 28 cents right now, and it got as high as $8. So when the token's going up here, everything's beautiful. Oh my God, I'm holding this token, it's going up. But see, similar to XRP, while the token's going up, what do you think Alex and his wife are allegedly doing? Similar to Brad Garlinghouse. while they're publicly telling you how great Celsius is, while Brad Garlinghouse is telling you how great XRP and Ripple is, they're dumping billions of dollars worth of the token on you, millions of dollars worth of the token on you at the highest price possible, while telling you, hodl, hold the coin. So now you're holding this coin because you're hoping that you can get the 9%, get the extra yield, but the value of the token is dropping. And then they're effectively behaving and acting like a hedge fund. So they're taking your, because remember, Celsius isn't just lending out your crypto, they're also trading it as well. And then they end up getting hacked. Everyone knows about this hack. So they lost $120 million in this hack. And then it's believed that they had about $500 million in UST, which was the Ponzi scheme. That was the Terra stablecoin that just collapsed in the whole Luna ecosystem. So they're taking massive losses. And then now they have over-collateralized loans on Aave and Maker that, because the market is dropping, they have to add more collateral to maintain their position. So clearly they don't have the liquidity that they need. Now, this is a beautiful explanation as to what's going on. And I think that many of you need to make sure that you're plugging into crypto Twitter. And I always say this to you, you guys. You need to follow individuals that they may have an opposing view to you. Don't live in an echo chamber where you're only following and listening to individuals that agree with your worldview or say things that you agree with. You need to make sure that you are following individuals who may take the counter argument or the opposite position to what you're saying and be able to, so that you can know what you own and why you own it. You can know the pros and you can know the cons. So Jack states, the Celsius blowup explained, huge sectors of crypto are imploding and crypto unicorns might be coming down. Luna was first, but now $10 billion giant Celsius is facing insolvency and even bankruptcy. Let's dive in. What is Celsius? In the last few years, we've seen the rise of so-called centralized DeFi companies that custody manage crypto on behalf of investors. They take your money / crypto, promise you a fixed interest rate, and then they put it on chain and use it in DeFi to earn yield. Let's take a step back. Let's unpack that. He said, so-called centralized DeFi. I say this to you all the time. If your cryptocurrency has a corporate structure, if they have a CEO, right, then clearly it's centralized. Now, I know people are going to say, well, what about Vitalik and Ethereum? Let's take a step back. When you look at all of the things that are being built on top of Ethereum, they're not talking or going through the Ethereum Foundation in order for, let's say, a chain link to be created or a loop ring or an Aave. These are separate protocols, separate teams that are developing and building on top of the protocol. That's the definition of something being open source. Not saying to yourself, oh, this one individual is in control of everything that's happening within the protocol and being developed and built on top of the protocol, right? So it's important that you understand these things. Now, are there certain aspects in regards to how the mechanics works in the real world that could be, quote unquote, viewed as centralized? Yes, but that's not the protocol. For example, let's think about Bitcoin. Where do you think most mining equipment and machines are produced and made at? But that doesn't mean that just because they're produced in one particular region of the world, that particular region has control over the protocol. Because remember, there's economic activity that has to go into making the machine. There's economic activity, meaning that you need to spend electricity, you need to hire the worker to build the machine. It's not like you just can make the machine out of nothing, right? So therefore, capital has to go into it. So it forces you to be a rational actor, because who is going to spend millions of dollars in electricity and millions of dollars in mining equipment to then turn around and try to attack the network and destroy their asset? Because remember, you get paid as a miner to mine the coin, meaning that you need the coin to maintain its value so that you can then convert it into fiat to cover your electricity cost and the cost that you spent on the machine. This is why it incentivizes you to behave properly within the network, right? It's very key that you understand these things, that there may be external factors that may be viewed as centralization, but that's not centralization. And a lot of people miss that. They don't understand those. It's a very, very huge distinction and difference between the two. Now, when we come here, it says, while they advertise their services like a bank, the service is almost more like a hedge fund or asset manager. These strategies have some risk involved and require supervision. And how do they make their money, right? This is what I showed you earlier. Originating loans to institutions and individuals, keeping whatever profits are left under running strategies on behalf of their customers. So they advertise 5% on USDC deposits, then swap that USDC to make 20% on UST. They can keep the 15%. This goes back to Terra, right? Understand that Anchor was paying out 20%. So everyone was parking all of this UST into the Anchor protocol because they were paying out 20%. So it's very easy to give your customers the 7% that you need to give them as long as the protocol Anchor is doing what it needs to do until it collapses. Everything works fine until things start collapsing. And we've seen the same thing happen in 2008 with the traditional banking system, where you had AIG, you had Lehman Brothers, you had General Motors. All of these companies and corporations that weren't even banks started behaving and acting like banks. Well, everything is great when the economy is doing well. But then we begin to start to see when things get a little rocky, the emperor has no clothes. Now, it says, and Celsius did phenomenally well throughout 2020 and 2021, reaching a valuation of $10 billion and recently raising $400 million. The only issue, they kind of manage their funds like degenerate gamblers, right? But let's take a step back. And this is something that's even happening in the stock market. You have all of these influencers and, all of these people who are popping up, these podcasters and these YouTubers, and, they're calling themselves, master investor and all of this different stuff. And in reality, many of these people really don't know what they're talking about. They just happen to be in the right place at the right time. See, when you have the Fed pumping trillions upon trillions of dollars into the financial economy, anyone can look like a genius. You have 16 and 15-year-old kids drawing pictures of rocks and goblins and making millions of dollars, right? But see, many of you base the value of a cryptocurrency based upon the fact of whether or not you make money, not based on its utility and what industry they're really trying to decentralize, right? Many of you just look at it like, well, I made money with this coin, so that's all that matters. I put $1,000 into a dog coin and I made 10, so Sheba's the truth to me, because you don't even understand what you're here for, right? And what ends up happening is many of you made a lot of this money on paper, right? In theory, but you held, and then you held it and the market crashed on you. And I promise you, I went through this in 2018. Many of those coins are not coming back. This is why I focus on owning legitimate projects that have real world utility and real world partnerships. They'll be here because right now, all that's happening right now is these are just institutions trying to test individuals' liquidity. That's all. Part 1, the Luna collapse. The Luna collapse shook the industry and made waves in mainstream media, maybe the biggest wealth destruction event in crypto. And Celsius was involved. Luna promised 20% interest on a US dollar peg stablecoin, making it a super popular product advertised as risk-free. And we know that nothing in life is risk-free. But when markets began to shake, the mechanism to hold the token at $1 failed, leading to a death spiral and a failure of a $40 billion protocol. Again, what did I say? This is important. Saying that Luna is a cryptocurrency is like saying that Pornhub is the internet, right? And what happens is that, what do I mean by that? What happens is that when people see that there's opportunity to make money, and because this technology is open source, you have a lot of people coming from the Web 2 world or centralized finance, and they're trying to market, keyword, market themselves as a cryptocurrency. Ripple is trying to pretend to be a cryptocurrency so that they do not have to go through US rules and regulations and get around securities laws so that they can have, right, unregistered security offerings and make money at the expense of you. There's something fundamentally different between Bitcoin, right? Very, very, very different. There's something very, very different between Bitcoin and XRP. There's something different between a Dogecoin, Shiba, Kishu, Floki, and Ethereum. They're not the same. And I think that it's important that you take the time out to educate yourself on the difference between a token versus a blockchain. So, with that being said, it says, but as Luna collapsed, many speculated about big institutional players losing their shirts on their holdings, and Celsius, who promised strong rates on stablecoins, was exposed to the collapse by holding maybe up to $500 million in USD. And this guy right here, Dirty Bubble Media, I would encourage you guys to actually go and follow this individual. I'm going to share his Twitter page here. He's done a phenomenal job of actually just tracking the blockchain and seeing what Celsius has been up to. Right here, let's open this up. As you can see right here, he has a thread talking about what happened here, showing the addresses, showing how to, and see, this is the beautiful thing about crypto. Everything can be tracked, traced, and monitored. And for lifetime members of My Tech Academy, the next masterclass that we have is going to be on using tools like Nansen to really be able to track things across the blockchain. So they can see the amount of crypto that flowed in. They can see $138 million flowed in, and they can see $138 million flowed from this address to this exchange and out. They can see it. And you can see all of how they try to break it up and everything. It's beautiful to see this because now, remember, when I was saying earlier about a system being anti-fragile, right now what's happening is that the smart money, the whales, they know for a fact that Celsius is, that they do not have a lot of enough liquidity. And they're going to try to push the price down as low as possible to basically force them to go bankrupt. Because there's big money in doing that. Like people who were shorting Luna. You know, people made billions of dollars in shorting Luna because they knew that Luna didn't have enough collateral to maintain its peg. So it says, and that's customers' money that got lost, but they had a buffer. At least hopefully they did. Part 2, Lido staked Ethereum. For Ethereum deposits, Celsius promises 6 to 8% in interest, with a lot of it likely earned from staking rewards on the proof-of-stake Ethereum beacon chain. The biggest issue with that is that assets held on the Ethereum beacon chain are completely locked up. You can't unstake for now. Crypto protocol Lido solves this problem by creating a liquid derivative asset called Lido staked ETH or staked ETH. While staked ETH has often traded at a 1-to-1 ratio, it's not pegged, meaning it doesn't have to trade 1-to-1. But Celsius kind of counts on staked Ethereum holding its ratio at 1-to-1 because it needs to match liabilities. In a bull market, that worked out. But with the liquidity crisis and bear market, the staked ETH/Ethereum ratio, technically not pegged, began to slide. This becomes an extremely, extremely, extremely big problem because, again, they have a large amount of Ethereum. That's customers' Ethereum that Celsius has. Again, they shouldn't have it in the first place. Not your keys, not your crypto. You should not be giving your crypto to middlemen like Celsius or Coinbase. But here comes the problem. You want your Ethereum back. They can't give it back. You know why? Because a large portion of it is on the Beacon Ethereum chain and you can't unstake as of right now. So let's say in the best case scenario that Celsius is trying to do the right thing. They don't have enough liquidity to meet the demands of their customers. And they won't have it for the foreseeable future. Because unless they figure out a way to go and borrow some money from someone else, maybe a bank or whatever the case may be, then they're going to be illiquid. They may have the assets on hand, but they're locked up in the beacon chain. And you're not going to be able to do that until after the Ethereum merge happens. And they're saying that the Ethereum merge may be delayed. So that becomes a problem. Now, let's do a mental exercise here. If a centralized DeFi platform like Celsius has to go to a traditional bank to borrow money to shore up their liquidity, then they're not decentralized. So why are you investing in that coin? Why are you doing business with that platform? Same thing with BlockFi, same thing with Nexo. Why are you getting involved in decentralization and crypto if you're only going to do business with middlemen? That makes no sense. And then now you have critics and master investors who are using things like Luna and Celsius and trying to somehow tie that in with decentralized protocols like Ethereum or Bitcoin. That doesn't make any sense. And see, another thing too that I'm noticing by just watching all of this unfold, this is many of you, this is your first time of actually ever going through a bear market. You see how calm I am? Do you see me rattled? Right? Because I made enough money in the bull market anyway. And I've been through this time and time again. I watched Bitcoin do this and drop 90%, 5-6 times already now? Because I understand what's going on here right now. You only lose money when you sell. If you're holding things like Bitcoin, things like Ethereum, assets like Chainlink, you're fine. You don't have to sit up here and worry because you hold real projects. But if you hold a bunch of meme coins, dog coins, illiquid JPEGs, you're going to have a problem. You will have a problem, right? If you hold things like Solana, you're going to have a problem. Garbage like Ripple, you're going to have a problem. Because many of these cryptocurrencies are not going to recover. It reminds me of things like NEO, and that was NEO during 2018, or things like EOS, or even NEM, right? These are supposed to be like Ethereum competitors and Ethereum killers, and then they crashed in 2018 and they never really came back, and they never lived up to their hype. And I see Solana being this bull market's version of EOS. So it says Celsius has likely failed to isolate risk. They might have taken USDC and held it in UST, Luna stablecoin, or taken ETH and held it in staked Ethereum. So when all of the crypto drops and all users want their funds back, all Celsius users feel the pinch. It's all the same pool of money. Celsius is facing a liquidity crisis, one in which prices that are spiraling downwards make it harder and harder. Need to go back. Celsius is facing a liquidity crisis, one in which that are spiraling downwards makes it harder and harder to match liabilities, the deposits with assets, whatever they hold on chain. So they shut down withdrawals. There are about $10 billion in customer assets in Celsius and about $1.5 billion accounted for in Celsius various wallets. So in terms of matching customers' funds to liquid assets, there's a clear mismatch. Think about that for a second. There's about $10 billion of customer assets in Celsius. That means that's locked in there. And about 1.5 billion of it accounted for in Celsius various wallets. So they really only have about $1.5 billion worth of crypto to pay out, and they owe over $10 billion in crypto assets. That's insane. Crypto was not created for this. And I don't understand, why these things continue to keep happening. So the individual says, and that loss in confidence inspires me more and more. That loss in confidence inspires more and more people to withdraw, which causes people to lose confidence, etc. And if it's not liquid, where's the money? Well, a few places. There's about $400 million staked on the Ethereum beacon chain. So that's $400 million that's locked up that they can't get right now until the whole merge happens. And then there's another $400 million leveraged in the Maker protocol, which has been alarmingly close to liquidation, although Celsius keeps topping up their position. And we can see that here. Everything you can see on chain. For those of you who don't understand what's going on here, let's do a mental exercise right here. Make it real simple. The way that borrowing and lending works in crypto is that you have to create what is known as an over collateralized loan. So let's say that I had $10,000 worth of wrapped Bitcoin or $10,000 worth of Ethereum. Effectively, what I can do is say, hey, I want to go and borrow some stable coins to go do some yield farming, right? I can, rather than leave my crypto sitting in the wallet and doing nothing, I can go and simply go take out a loan against it, go borrow $5,000 worth of stable coins and go make 8% or 9% somewhere. This is what a lot of people are doing. Very, very simple math. Let's just think about it. If you borrowed $5,000 against your $10,000 worth of collateral, and that collateral, let's just say, drops down to $5,000 and you get liquidated, guess what happens? You owe 5 and your collateral is worth 5. So guess what? The protocol now needs to get their money back because you're under a certain threshold. So they just simply swap what you owe with your assets. They take the $5,000 of assets to satisfy what you owe. Problem solved. But here's the biggest problem with that. Now you don't have any more crypto, right? So when we look at this, this is important here. They have $444 million worth of wrapped Bitcoin. Very, very important here. And their debt is $263 million. Let's not even play the whole LTV, loan to value ratio and all that. No, let's just simply say right now, if they were liquidated, they owe $263 million. Remember, this $444 million, this is the customer's money. So if you subtract 263 from $144 million, what do you think that is? About $180 million. So basically, they're going to lose, if they get liquidated today, $263 million of their customers' money. They're going to basically get back, 50 cents on a dollar, 40 cents on a dollar. And where am I going with this? You see how we see this? You don't think that there's large hedge funds that don't know this? You don't think that there isn't large institutions that don't know that Celsius is in trouble and they may have large amounts of Ethereum or wrapped Bitcoin and they're going to sell it down hard to force them to get liquidated? Because guess what? When they get liquidated, that creates more selling of the underlying asset. Very, very simple mechanics here, right? So when I'm watching this unfold, Bitcoin's not selling off because there's something wrong with Bitcoin. Ethereum's not selling off because there's something wrong with Ethereum. This has to do more with just market mechanics. So I'm still bullish on what I'm owning. Now, I understand as long as the Fed is raising rates, in the short term, this is very key. In the short term, asset prices will trade lower. Now you have to ask yourself, are you investing for the short term or are you investing for the long term? Why are you investing in the marketplace? Because if you're looking to hold your assets for the next 2 to 5 years, then you don't care about these slow, small downturns. You're saying to yourself, I'm adding to my position. I can get Link for $5. I can get Quant for $40. I could buy Telcoin for under a penny. So this is a buying opportunity of a lifetime. Because again, same thing with Michael Saylor. I was talking about this earlier. When you announce to the world that you're taking out debt to buy something, then the marketplace knows at what point you're under collateralized and you need to put up more collateral. Michael Saylor at 21,000 is going to have to put up more collateral, meaning that he's going to have to go out into the debt markets and raise more debt. Well, what if he can't raise enough debt to maintain that position? So there are really, really smart and powerful people watching this, and they're saying, we know Michael Saylor is over leveraged because all his Bitcoin he purchased was above 30,000. That's all they're simply doing. But you got to know what you own, and you have to know why you own it. Because if you know what you own and why you own it, you're not panicking right now. You're sitting here and you're looking at this as a buying opportunity. It's important to note that these positions are often hunted by institutional trading desks. Firms will actively try to push down the price to get these big positions liquidated, then make money on a trade when the forced liquidation goes through. This is exactly what I've been saying to you. I've been saying this to you for a very, very long time. Just like, I love how you see like all of these master investors all of a sudden telling you that, yeah, the market was going to go down. I've been telling you for months that we're going to break $30,000. I've been telling you for months that we're going down to about $2,000, $1,700 Ethereum. And then I started telling you once the article came out about Michael Saylor, I knew for a fact that the market's going to try to test Michael Saylor. I've been doing this for long enough for you to understand. You'll know the bottom is in when you start seeing large institutions going bankrupt and needing bailouts. That's when you'll know the bottom is in. Someone is offsides right now, meaning that they leveraged up too much. They invested too much in both the stock market, real estate market, and the crypto market. And what we have to start seeing is bankruptcies happen. Is people going to the Fed and needing bailouts. When you start seeing that, that's when you know the bottom is in. Same thing happened in 2008. We watched it with Lehman Brothers and Bear Stearns. We watched it happen with the repo market back in 2019, 2020, when the Fed had to come and inject a whole bunch of liquidity. That's when you start knowing people are in trouble. Remember when the Fed had to start buying, airline debt and stuff like that? Whenever you start seeing that stuff happen, that's when you know the bottom is in. So right now, what you should be doing is having your shopping list ready and understanding what's the game play. What's the game plan? If you read books like The Creature from Jekyll Island, what happens every time? The Fed prints more money, the Fed bails someone out, more inflation happens. Don't get caught up in what's happening quarter to quarter. Focus more on what's happening year to year. Do you think that the Fed can really fight inflation? Do you really think that the Fed can keep interest rates high for an extended period of time? No, they can't. Because what they will do is effectively crash the economy and also hurt the government's funding abilities, because we know for a fact that the government is spending $7 trillion and only taking in $3.5 trillion of tax receipts. Well, guess what? That means that they have to do what? Deficit spend. They have to borrow money from the markets in order to fund themselves, meaning that they have to pay interest on that money. Well, if interest rates goes up, then the interest on the debt goes up. And then if the economy's not doing well, then the government's taking in less tax receipts. If people are losing their jobs, the government's taking in less tax receipts, less tax revenue. So it becomes this domino effect. So what do you think the Fed's going to do long term? I told you this before, and I'll tell you this now again. They're going to cut rates. They may raise rates for the next 3 months, 6 months. I guarantee you, soon as something breaks in the economy, they'll be right back to doing what? Cutting interest rates again. Happens all the time. And eventually we're going to see negative interest rates just like in Europe. So, a couple more passages. As for the rest of the money, who knows where it is? Maybe it's lent out on centralized exchanges and everything is kosher. Maybe it's not. And how does Celsius solve this problem? Well, as I said, it's possible that they're totally solvent. They have enough assets, but just illiquid, meaning that they have a lot of the Ethereum sitting over on a beacon chain. They just need to figure out a way to either borrow against it, get a loan from someone, and they're not insolvent, right? If that's the case, they can try to negotiate with other institutions, whales, to offload big illiquid positions at a discount. And they've been trying to do that. I've heard behind the scenes. Even Nexo reached out to them and offered to buy some of the assets that they hold just for them to raise liquidity. So that is true in regards to people trying to step in right now and give them funding. If their assets don't match liabilities outright, they're kind of screwed and will require external funding, a loan acquisition. Here we go. Nexo has already proposed to take over, or they'll just go bankrupt, in which case all of the depositors are outright screwed. Markets are obviously shaken by the news, and these big institutions are becoming forced sellers. It's not a good sign. As always, this invites regulation, oversight, and legal action from governments, institutions, and critics. A dark day in crypto for sure. Stay safe. So, where are we going with all of this? These are things that I have been sitting on this platform saying to you guys for years. Not your keys, not your crypto. Get you a hardware wallet or get you some type of a desktop wallet where you actually control the keys. If a protocol is promising you 10, 12, 13, 14%, the key question needs to be how? Where are they generating the economic activity from to be able to pay out these outrageously high yields? and understand in crypto, everything can be tracked, traced, and monitored. So you should be monitoring what's actually happening in these protocols, so you can be aware and know, or follow someone who can do this type of stuff for you. Because meet Kevin, Upper Echelon Games, CoffeeZilla, they were speaking about Celsius a year ago, 6 months ago. And see, this is what's amazing to me, is that anytime someone raises questions about your favorite cryptocurrency, you call it FUD. You say you're hating, you're jealous. Why can't it just simply be, I'm coming at you with information? Prime example, as I shared with you guys earlier with Binance. Binance, the biggest crypto trading platform, pauses Bitcoin withdrawals. Binance is a centralized exchange. If you're buying crypto on Binance, you need to be buying it off of Binance and sending it to your hardware wallet. Now, guess who made a video about Binance? I did. I have plenty of videos about Binance. If we come down here, we go to videos. I made a video about Binance. This is on my Instagram page. I made a video about Binance right here. Right here, I made a video July 27th, 2021. And I titled the video, Urgent, right here. Urgent, get your crypto off of Binance. So, I've been doing this for a very long time. I'm not saying that everything I say is 100% accurate. I would say I'm probably about 73% on the money most of the time, right? I've been telling you that this was going to happen. And what this is going to do is that exchanges like Binance, garbage like Ripple and Luna and Celsius, these are attacks on decentralization. Because effectively what this is doing is it's allowing grifters to come into our space, garbage like Solana, pretend to be Web3, pretend to be decentralized. It's really just backed by a bunch of VCs and venture capitalists that's looking to make money, right? They buy these coins or they do these ICOs and they get in that 24 cents, $1, and then they dump on you once you push it up higher. And then now, because you were greedy, you didn't educate yourself, you're going to go run to the government and beg for regulation. And regulation will definitely come. Because most people don't want freedom. Most people don't want accountability. They want someone else to do everything for them. They want the government to tell them what they should be eating. They want the government to educate their children. They want the government to fix their roads. They want the government to fix their bridges. They want the government to take care of their retirement. They want the government to take care of their health care. They want the government to tell them what gender they should be. They want the government to tell them how much they should eat. They want the government to tell them how safe their vehicle is. They want the government to tell them how safe their food is. Most people, most adults are children. Most adults don't want responsibility. They want to pass responsibility off to government. And see, if you don't have much planned for yourself, guess how much they got planned for you? Not much. Joe Biden was supposed to save the world. We had to get that big, fat, mean, angry, orange guy out of office. And everything was going to be fine. Well, he's gone now. Inflation's through the roof. Pandemics, war. Nothing got solved. You have to seek solutions to solve your own problems. That was the whole purpose of what Satoshi was trying to do when he created Bitcoin, was to algorithmically and with cryptography and distributed networking solve a problem so that we didn't have to rely on regulators and rules, that we could govern ourselves. But as we sit here, we realize more and more and more people are too stupid to govern themselves. People are too stupid to want freedom. They want someone else to do everything for them. So these are the things that happen, and you get stuff like this where you have venture capitalists laughing at you. I put this reel up the other day and I want to play it because it's so like they know that many of you are so stupid and so childlike that they literally laugh at you. Like, listen to this.
Sax, I gotta say, I think your AUM is positively correlated with the bags under your eyes.
If you mean it's getting bigger, you're correct.
I mean,
Yeah, they're heavy.
good lord,
They're heavy, dragging you down.
that's where you're hiding all that Solana in fucking under your eyes. Jesus.
You better clear that Solana position. What's your lockup? 24 months?
Fuck no, he's trying to sell it to me on text message.
Yeah, of course he is.
We're negotiating discounts,
I just had the fact.
Hey, you're fucking the whole thing up.
bro. You don't think
Ponzi
to,
scheme?
I'm hodling. I'm hodling.
you think I buy
You're not
hundreds of
holding, you're
millions of
clearing.
dollars of anything without a discount? Everything is a discount.
Everything's discounted. You want to clear that position in an LLC?
Are you saying I got $1 billion of Solana?
No, bro, I'm saying I have one, but I brought it at a discount.
But you're holding, correct?
Ish.
Yes. Okay. Yeah, me too.
Well, I mean, if you're
Yeah, that Solana sure is an Ethereum killer. Web3. These are venture capitalists right here laughing about how much Solana they hold from low prices, and now they're hodling-ish. And he said he doesn't buy anything unless he gets a deal. He's hodling-ish. And I sit up here and I told you guys, Solana's not decentralized. It didn't solve the blockchain trilemma, right? And this is and now every 2 weeks, Solana's going down. And then see what happens is that when you don't understand the technology and what it's designed to do and why it was created, and then you put money into stuff like Solana, you put money into stuff like Ripple, you put money into stuff like Luna, and then you get burned, and then it doesn't recover, then you go and run for regulation. And you go, see, crypto needs to be regulated. Crypto was created because of regulations. It's like, it is mind-boggling to me. It's like people go, we need regulations in crypto. Do you understand that crypto was created to go around regulations, to get rid of regulations? That doesn't make any sense. It's the antithesis as to why crypto was created in the first place. It wasn't created so that you can add rules and regulations and turn it into centralized finance. Crypto was created to get away from centralized finance, to get away from government, to get away from rules and regulations. And instead, because you're greedy and you want to make some money, I want regulation. It is mind-boggling to me. It is mind-boggling to me. Right? It was not created so that we can go and we can have a bunch of CEOs and executives and rules and regulations. That's not why it was created. And we can get rid of you with your works. Because, look at this beautiful thing, right? Think about this. You have people. Think about how mentally ill you have to be to go around and literally comment foolishness that you don't even believe yourself. Look, we need policing in cryptocurrency. No, we don't. No, we don't. Here's what we need in crypto. We need for people to stop being greedy. We need for people to take, like Gary Vee said, take 30 or 60 days and spend 15, 20 minutes of your day just educating yourself on what is blockchain technology? What is cryptography? What is distributed computing and networking? Why was cryptography created in the first place? What other fields is cryptography used in? Just take some time and just educate yourself. And stop FOMOing and thinking about the Lambo and the Bentley, and just think about what's really going on here. Why was this created? Why would someone want to create this in the first place? I guarantee you, if you take that time to do that, you'll be much better off. just ask, what are we doing here? Why did Satoshi want to solve the double spending and Byzantine generals problem in the first place? Because if you do that, you'll be much better off. And this way now you can construct a portfolio where, let's say you have $100,000, $200,000 to invest. Well, you may put 40,000 of it into some garbage, but the rest you put into solid projects. I've watched this happen time and time again, and I'll take some questions in a second. I just want to show this last thing. You know, I love to show this all the time. Because when you've been doing this as long as I've been doing this, let's go here to images and let's pull up this image here and let's download it. Where's it at? Save it in documents. And then let's open it up. Here you go, down here. I always like to share this image here because it puts things in its proper perspective and context so that you can sort of understand what you're even here for, right? This is all of Bitcoin's horrific crashes dating back to 2012. And I've heard these talking points over and over and over again. When Bitcoin went from 7 to 3, from 16 to 7, from 49 to 33, from $76 to $50, from $259 to $45. The Russians made it. Satoshi's Japanese. China owns it. It's not really decentralized. It's only used to buy drugs. It's only used for sex trafficking, right? Over and over and over and over again. The miners control the blockchain. It was made by the NSA. It was made by the government. It's the same talking points over and over and over again. And you know what happens? Every other year, every 2 years, the market crashes, and it goes back up. And then it crashes to $100. It went from $1,000 down to $152. Then it went back up to $1,000. Then it went to $800. Then it went to $2,000. Then it went to $1,800. Then it went to $2,900. Then it went to $1,800. Then it went to $4,000. Then it went to $2,000. Then it went to $7,000. Then it went to $5,000. Then it went to $19,000. Then it went down to $33,000. And then went up to $60,000. So you can listen to the master investors and the crypto geniuses and gurus, or you can understand that history doesn't repeat itself, but it damn sure rhymes. And you can focus on saying to yourself that, what am I here for? Am I here to build wealth? Or am I here to speculate in meme and dog coins? Because if you're here to play in meme and doggy coins, then don't get mad when you lose in the meme and doggy coins. Not complicated. Right? Now, when I look at things like Link, I believe that Link is going to probably be listed as a security. Wow, shocker. You see how honest I am? But I'm not investing in Link because I believe that it's super decentralized. I'm investing in Link because it's part of the World Economic Forum. And I understand that because many of you are lazy, you don't value your freedom, you don't value your sovereignty, the world that we're probably going to live in is going to be more of a centralized, decentralized hybrid. It's most likely where we're going to go. We have the potential to really live in a truly decentralized world, but the problem is that most humans don't thrive that. So most likely we're probably going to be in some type of a blend, and that what I've learned is that if you can't beat them, then you should join them. And I believe that things like Chainlink are going to be very, very vital in regards to what the World Economic Forum is trying to do moving forward. Shit like Ripple won't. And don't talk to me about the ISO standard, the new standard. What's stopping the bank from making its own cryptocurrency? Right? Because banks are here to make money. And if Ripple really had something that could truly make banks money and make it more efficient and cheaper for them to do that, why haven't they adopted it yet? Well, I know why. Because remember, one of the largest Ripple channels, he said that Donald Trump is secretly investing in XRP, and they're about to switch back to the gold standard. And the lizard people are going to come down from Planet X and Nibiru with microchips in their hand and start using XRP. Like, some of the things I hear are just foolish. Oh, it's a bridge currency. It's a bridge currency. Who the fuck is bridging with it? Who's using it? Pure foolishness. Right? So I'll take some questions. I saw some donations come in. Boom, 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 boom. I appreciate all you guys who donated. Appreciate it. Thanks, Edward, William, Sams. I've been looking at the Polkadot system. I'm bullish on Kusama. I would not be that bullish on Kusama. Kusama is designed to be a live testnet, meaning that rather than, and when you're developing things, you have a testnet. Like Ethereum has Ropstein, which is a testnet. They have a few testnets. Let me pull them up. I have them right here on my MetaMask when I be coding and building stuff. So there's another one. There's Ropstein, there's Kovan, and there's Rinkby, right? So they have multiple testnets, but these are they're not like live in regards to there's not real money at risk there, right? So what Polkadot wanted to do was create like this canary chain where there'll be live actual dApps and applications and protocols built on it or plugged into, their quote unquote relay chain thing. But the problem is that it's a test network, right? And what ends up happening is like they'll launch Moonriver on Kusama, great. And then everyone goes there, starts yield farming, and then they launch Moonbeam on Polkadot. And all of the liquidity leaves because see, what starts to happen in DeFi is that because as of today, there really isn't a lot of like use cases for crypto. There just isn't. You have to be real about that. So, and also there's not enough economic activity to support these 5% and 6% and 7% interest rates. So what these DeFi protocols do is they mint a lot of inflation, right? They have a lot of emissions into the protocol. So when you see like Moonriver, they have a special going on where you can make 13% on this, on these two particular coins in this particular pool. What happens? All of the degenerate DeFi yielders, the yield farmers, they take all of the liquidity from, let's say Uniswap, and they move it over to the Moonriver chain. So you'll see the TVL spike up. And then once the emissions and all of the inflation is paid out and the bonuses is over, what do you think people do? They leave Moonriver and go to the next chain. So this is why you see people constantly moving liquidity from chain to chain to chain to chain, because they just want to basically get in front of a bunch of the fees and the emissions, milk the chain and go to the next one. So I would be hesitant on Kusama. I would focus more on Polkadot and what Polkadot is trying to do and just basically focus there, because look at it today. If we look at Polkadot and the price that it's at, right? Like this, let's use our brain here, right? Like, you want to buy in markets like this where you have like premium cryptocurrency projects with real teams, real technology. Look at it. The market cap is $6 billion. It's trading at $6, right? So right now, in the ideal world, not financial advice, but if you could buy something at $6 that was once trading below $55, you're looking at making 9 times on your money. If crypto recovers in the next 2 years, you can make 9 times on your money, right? Because you have Polkadot, which is here, and then you have Kusama that's here. So realistically, this is where risk versus reward comes into play. There's a great reward opportunity and less risk here, right? Because think about it, which one has a better chance of succeeding long term? The Canary network, the test network that's live, or the main network like Polkadot? Most likely it's going to be Polkadot. So when I look at it from that perspective, I'm saying to myself, I got so much room to the upside, right? If this thing is half as good as it's trying to be, if crypto recovers, and I'm looking at it and saying to myself, that's 9 times on my money, right? So that's just how I view things, where like potentially, let's say we drop another 50% from here, but over the years we do, 2,000%. The risk versus reward makes sense to me here. That's how I look at it. Hope that answered your question. Thanks, Edward William Sims. Again, if I didn't say so, Asuni, this is why you take profits and jump on DYDX when it's time. Love the show. Keep going. Absolutely. And this is why like, for example, I never believed in Solana, right? But I was holding Solana. I was doing a live presentation for my students. Again, I'm actually like I'm going to screen record that 30-second window. As soon as Solana had flipped Ripple, I said, I'm selling it. because I knew at that point I had already made 6, 7 times on my money, maybe 8. I don't remember off the top of my head. But I remember sitting there on a live with my students saying, as soon as I get off of here, I'm selling it. Because I knew what I owned and why I owned it. I didn't own Solana because I believed in the vision or the technology. It was just simply a trade to me. But things like Chainlink, I'm not selling my Link because I understand what Link is trying to do. And more importantly, I understand who's behind it and what they're trying to do. My Bitcoin, I'm not selling any of my Bitcoin. Not right now. I definitely plan on selling it at a particular price. I've mentioned that to you guys before, but not right now. My Quant, I'm not selling my Quant. My ApeCoin, I told you guys, ApeCoin breaks $20. What am I doing with ApeCoin? Go. Do I need to pull up the stories? I told you guys, ApeCoin breaks $20. I'm selling it. Taking some off the table. Why? Because I made 3 times, 4 times of my money. Right? So I know what I own. I guess what I can do? I take profit and I buy back in. Also, from a tax perspective, and again, I'm not a tax professional. I'm only relaying to you what was the information that was given to me. Number 1, there's something known as short-term versus long-term capital gains taxes. So when you're trading in and out of crypto constantly back and forth, you're generating a bunch of taxable events. Whereas you can hold crypto assets for longer and you get a lower tax rate. Number 2, also, in the event where your assets drop a lot, you can also write a lot of that depreciation off on these assets. Again, go and talk to a tax professional. I'm not a tax professional. I'm just letting you know it's known as like basically tax loss selling and different strategies that you can implement depending on if you're an LLC, depending on if you're an individual, depending on where you live. Again, I'm relaying to you the information that was relayed to me through a tax professional. I would encourage you to go and see a tax professional just to see what options you have, because many of you think like, oh shit, the market's down 40%. It's over. And in some cases, there's tax incentives that you can get for the market being lower. So you can hold your assets while they're low and basically be able to get some type of tax breaks as well too. So make sure you're educating yourself on that and reaching out to people who really understand crypto in regards to just from the tax perspective. Do you still feel good about ApeCoin? Absolutely. I'm a huge bull on ApeCoin, on the ecosystem. Snoop Dogg just announced, I think it was like a week ago, that he's looking into creating a Bored Ape restaurant. The game is getting ready to launch sometime in July. So I'm a huge bull on it. I've been buying more land inside of that metaverse and buying more ApeCoin. I'm a huge bull on the concept of play to earn gaming because I understand that more and more of you are going to lose your jobs and you're going to be looking for ways of earning money. Remember, you can't look at this is what happens. And I'm not saying you're doing this. I want to make it clear. Many of you get caught up into what's happening right now today. You focus so much on the micro that you don't look out further enough to look at the macro. And I believe that that's one of the biggest problems with especially being a new investor, is that, you get so caught up in looking at your portfolio every 5 minutes, and crypto spoils you because you get involved during this bull market and everyone's making money. Every coin's up 10% in a day and 50% in a week and, 300% in a month. And you're like, oh shit, this is easy. And then like now you get involved in the bear market and you're like, oh, like you love the coin at $60, but you don't want to touch it at 10, right? And it's just, it's so like counterintuitive because you got to kind of trick your mind to say, well, if I liked it at $20 and at $10, why would I not like it at 5? Why would I not like it at 3? See, these are things that you have to kind of, internally, fix about yourself. Like, think about it. I invert my thinking, right? When you have all of these master investors all of a sudden becoming experts in crypto and bear markets, that makes me want to buy. Like, I've been buying Gala games and different cryptocurrencies all day because when I see so many people thinking they know about crypto or thinking they know what's going to happen, I take the other side because most of investing is really doing the opposite of what everyone else is doing. Everyone else is bearish, calling it a scam. How do you think I got rich? How do you think I'm here right now? Because in 2018, 2019, 2020, guess what I was doing? Buying VeChain, buying Matic, buying Ethereum, buying Bitcoin. And now I'm going to get even more filthy rich, even filthier, because so many people are sitting here right now. Like I'm looking at buying ape NFTs, mutant apes. Like there's just so much stuff going through my mind right now. And I'm just sitting here. I'm starting a validator node project. I'm gonna be running my own nodes now. Like there's so much stuff that I'm doing right now, putting together, because the money is made in the bear market. The money is made when no one wants to touch crypto. Why do you think I'm opening back up the coding bootcamp? Because for some of you, you're going to go out here and be able to build the next Uniswap or build the next project. This is the key, how you have to be thinking. You have to be forward looking, looking out the next 3 to 5 years. Do you think the world is getting more digital or less digital? Obviously, it's getting more digital. So why would you not want to be a part of the next digital revolution? It just doesn't make any sense. So I'm a bull on ApeCoin. I love ApeCoin. I'm 100% involved in the ecosystem, and I own a lot of other side land. Cardano thoughts. You guys know where I stand with Cardano. Cardano is a cheap imitation, a blend with Ethereum and Bitcoin. And as long as you're copying someone else's work, you're always going to be a step behind. Charles is an amazing communicator. He's an amazing bullshitter. Like I would say that Charles is probably one of the top 5 bullshitters I've ever seen. Like just in regards to like who could sit and talk to you. I would put Charles and Richard Hart in like the same, like because like Richard's really brilliant. Richard's really smart, but he knows how to bullshit people, right? Like promise them the world, and he just sits there and they talk to you in these calming voices, and you know, just tell you everything's going to be all right. As soon as we launch Shelly, as soon as we get these smart contracts, guys, and he puts his little hat on, and he has his scarf on, and he's drawing all this shit on the board, shit that you don't even understand. He probably don't even understand it either. He just go there, right? He sits there and he's like, guys, you just have to understand, you know, we're here for humanity. We're not here because, you know, we want to drive Ferraris and Lambos. We're here because we're going to go in Africa. We're going to help these kids, and we're going to put their identities on a blockchain. And I'm telling you, when we get smart contracts, Ethereum has nothing for us. I respect what those guys are over there doing, but just I'm telling you, when we get these smart contracts, guys, it's over. And then you get smart contracts. Where are the applications at? Where are the users at? Where are the customers at? Where are the Africans at? Right? So, you know, when I look at Cardano, again, as long as you are copying someone else and trying to be better than them, you're always second to them, right? And I don't want to own, you know, saying what's second, right? I want to own what's cutting edge, what's innovating, what's really out here trying to do things. And when you look at Ethereum, everything you see is whether the things work properly or not. That's another discussion. But it's innovative, it's new, it's different, it's something to tinker with. ZK rollup, ZK snarks, you know, optimism. You know, things like DYDX and bridges and stable coins, like, you know, and NFTs and, you know, different token standards. All that shit's happening in Ethereum. And you get this guy, man, all we got to do is get smart contracts. So all we got to do. Folklore, you in my mind right now. I'm looking into something like that, but the problem is that may be a security, right? So you have to be careful when you create something where people are getting paid off of your work, right? But I'm looking into it. Your mind is thinking like my mind. I'm sorry to hear that, Wayne. Wayne Backus. He says, I have 70% on Celsius. Me and my wife are in a bad situation right now and hope they don't get pinched. Yeah, you know. Listen, man, I would encourage you to join my Tech Academy. Link is in the description below. I would encourage you to definitely go get educated, man. I would encourage you to go read books like this. Read Creature from Jekyll Island, The Price of Tomorrow by Jeff Booth. You know, I have my whole list here. I'm trying to guess on the top of my head. Like I have a great list of books that you can go and read. The Internet of Money by Andreas Antonopoulos. Go and read The Bitcoin Standard. Skin in the Game by Nassim Taleb. Fooled by Randomness, The Black Swan, and also Anti-Fragile, just to understand, systems and different things of that nature. So I think I got to all of the donations. So we can wrap this up here now. In closing, I've been telling you for years now, not your keys, not your crypto. Go and get you a hardware wallet or have a desktop wallet that allows you to take custody of your crypto. You should be dealing with any type of lending and borrow protocol. It should be something like Aave, where you are interacting directly with the smart contract. Like when you do borrowing and lending on Aave, you are interacting directly with the smart contract with your MetaMask wallet. You're not giving your keys and your assets to someone, right? They're going into a protocol. Crypto was created to remove middlemen such as Celsius and Coinbase. At a certain point, you have to understand what you are here for. It is important for you to know what you own and why you own it. Because if you don't, you're just simply wasting your time. I tell you guys this all the time. I've been doing this for a very, very long time. Where there is smoke, there is fire in crypto. Because everything is open source. The blockchains are open. You should know what you're interacting with and engaging with. You should have a spectrum in regards to risk. Really, really risky, medium risk, not that much risk. When you look at things like Bitcoin, you look at things like Ethereum, you look at things like Aave and Maker, they're not as risky as something like, let's say, a Celsius, right? And I think that you have to understand the difference between, legitimate projects that have real teams and real utility and they're really trying to build things out, right? Versus shit that's just fly by night. Because understand, this is crypto. The market cap is very, very low. So it's very easy to push the prices around. But once the VCs and the institutions are done pumping and dumping different projects left and right, eventually that capital is going to flow towards the solid projects. And I really think that many of you need to take the time to really start understanding the difference between, premium projects, good projects, great teams, real utility, real use cases, and things that are just here, for the moment, right? Like I remember before there was a pot coin and there was OMG and all of these other coins. And now look, this bull run, you didn't hear anything from them. So I think that it's important for you to do that. Make sure that you guys are, doing your due diligence and educating yourself. And more importantly, that you are in communities with people that they have diverse opinions. See, this is key. Don't live in an echo chamber where you're only listening and hearing information from people whom you agree with. Go and seek out information that's counter to what you think and what you believe. Because if you do that, I promise you, it will help you grow and develop. It will also help you develop better talking points or counter narratives to what other people's talking points are. And you'll really know what you own and why you own it, or what your political leanings are, whatever the case may be. Many of you don't like to be challenged and you don't like to be questioned. You kind of, shut down any type of opposition to your ideas. And that's not healthy or conducive to, what you're trying to do as an entrepreneur or as an investor. And I appreciate it, Pocket Watchman JT. Again, I encourage you guys to go and check out Pocket Watchman JT, because me and him are of similar mindsets where it's good to ask questions. It's good to be skeptical, right? And also understand that when you see people like a JT or CoffeeZilla or Meet Kevin posing questions, right? There's nothing wrong with posing a question. Your job is to ask yourself, can you answer that question, right? If I say to you that this NFT project is a scam, or if I say to you that this cryptocurrency is useless and garbage, can you tell me why it's not? Can you show me how they're going to get mainstream adoption, how they're going to get real users and real customers? Can you show me that? Not can you repeat what you heard someone else say, but can you actually go into source code or go to documentation or information to back up the things that you believe? That's very, very key here. See, I know why I own Chainlink and why it's my largest position. More importantly, I know when I'm wrong. I know why I own it, but more importantly, I know why I shouldn't own it. If certain things start happening within the world economy and within rules and regulations, then I'm going to know when to hop off that bandwagon. So you got to know the two. It is very, very important that you do so. So with that being said, guys, I'm going to hop off here. I'm definitely going to be streaming more tomorrow. I plan on going live about Michael Saylor because I truly do believe that we're going to test $21,000. I believe that the market is going to put pressure on Michael Saylor to see, does he have the collateral to be able to back up his position? Because he's taken out a lot of debt to buy that Bitcoin. Well, now they're going to see, will the market give him even more debt? That's going to be interesting to see. So I definitely will be going live about that tomorrow because I'm telling you, the bottom's not in until you start seeing large institutions and banks and individuals going bankrupt or needing a bailout. That's when you know the bottom is in. A lot of people are over leveraged right now. And even in the stock market, a lot of institutions are going to have some pressure put on them. Because remember, this is a Fed week. The Fed's getting ready to raise interest rates. So I expect some volatility in the market. With that being said, guys, have a great, great, great night. About to go watch the Warriors lose.